Good morning, traders. It is 8 a.m. Chicago time on October 24th, 2016. It's a Monday today. Thanks for joining. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Looking at the overnight session, there really isn't much to report. Germany reported its October preliminary manufacturing PMI came out at 55.1 versus 54.4, the 23rd month of expansion. Germany is once again the strongest economy in Europe. Not much else to report there. As far as since it's a Monday, we'll look at the week. As far as what we're expecting for the week, for the rest of the day, um, we've got uh, manufacturing PMI at 9:45 Eastern, and then we have a slew of Fed speakers. The first of which is Fed's Dudley speaking now. Fed's Bullard at 9:05. Fed Speaker Evans at 1:30 Eastern. All times are Eastern U.S. time. On Tuesday, we have the IFO business climate, and we also have the Case-Shiller housing numbers, as well as consumer confidence. As far as speakers, tomorrow we have ECB Speaker Draghi at 11:30 Eastern, about what is that, 4:30 London time. And then we have Fed Speaker Lockhart at 1:20 Eastern. On Wednesday, we have the German GfK consumer confidence. And then in the US, we have advanced goods trade balance, wholesale inventory services PMI, and new home sales, as well as the oil inventory. On Thursday, we've got UK GDP, as well as durable goods, pending home sales, and other numbers in the US in the morning. And then as far as speakers on Thursday, we're looking for ECB Speaker Visco at 4:15 a.m. Eastern and ECB Speaker Nowotny at 8 a.m. Eastern. On Friday, a pretty light day in the calendar except for the U.S. core PCE. There's also the German preliminary CPI year on year. That comes out at about 8 a.m. Eastern U.S. time. And then core PCE at 8:30, and then the University of Michigan final at 10 a.m. expecting 88 there. And we have ECB Speaker Kerr overnight. That's basically how our week is shaping up again today. Just keep an eye out for U.S. manufacturing PMI, the prelim number, expecting 51.5, and then we have Dudley now, Bullard in 5 minutes, or now in 3 minutes, I guess, 2 minutes, and then we have Speaker Nowotny at 12:15 Eastern, as well as Fed's Evans at 1:30 and Fed Speaker Powell at 2. So it's busy with the Fed speakers today. As far as what we expected on Friday, we were opening in a slight gap down, 21.2550, versus lower than the prior 2 days. The expectation is for a choppy open, an open auction, and then for the market to push back up towards 21.32. And then find sellers, rotate down, test 2050, and then continue lower, pull back, and then continue lower towards 2110.50 again, and potentially 2105, 2103. The secondary hypothesis was what actually played out, except it didn't play out fully. We just played out the first part of the hypothesis. It was expected to be an open auction right here, and then for it to push higher. And the number I was looking for is around 2138, 2138 with 2135 being the prior day's point of control. And then sellers were expected to kick in and basically turn us around for the afternoon. But we actually rallied through the afternoon. So that was what was expected on Friday on the second hypothesis. The third hypothesis was more of an open test drive. The market opens, attempts to respond higher, finds sellers, and is aggressively sold uh, to uh, to um, to dissipate some of this energy that was built up over the last week and a day, and that did not happen. Instead, we rallied, and we continue to rally right now. So let's look at what happened on Friday here. There it is. It's an open auction. Very, very clear that there's no higher time frame participant in here. Completely boxed out. Um, wow, that's a beautiful box. Completely boxed out, and then the market started to push up, bouncing off of mid early on several times. There's no way to get on that really, but once we broke the IB high, we tested the IB high multiple times, and then we continued to push higher. The 2128.50 is was now the LVN, the key LVN for the day. We pushed back into the range, and then we made our, we did the usual. We tested the value low and stopped right before it. We tested value low and then pulled back and pushed through. And once we got into value, we went right to the point of control. Here's the point of control. That's the most traded price of the day. Uh, that's the most traded price of the day, and that happens to be the high of the day. A very orderly, shorter time frame kind of movement, intermediate to short, with the market resting near highs. The configuration we ended up with on Friday, this strong high volume node up here with some, you know, weird kind of no consensus type of trading across the board. We expect the way we close, we expect that the market is likely to continue higher in the next session, and it did. The market has pushed way up. Actually, it is the overnight highs all the way up to 47.50. And what we've done here is break this channel that we've been on. Channels built on several points right there, there, and there, um, including Friday's high, and then on the downside, just basically a parallel line. And what we're doing is we're trading up here at the key low volume node at 44.50. We've talked about this price all week last week. 44.50 was that price that the market was attempting to get to multiple times and unsuccessfully. The highest we got was the prior Friday at 43.25, and then we tested again at 42.5 here with lower highs. So there's an additional trend line that goes something like this, and then a wedge is formed. And what we did is generally we expect these to break in this fashion. We expect it to pull back and break down. That's why hypo 1, hypo 2, and 3, actually hypo 1 and 3, we're looking for a push through that ascending wedge to the downside. I'm not a chart pattern trader. But it's basically showing that the market's butting up against the high, and what happened last week was the point of control kept shifting down. There's the peak on Wednesday, down lower and lower, with a lot of strength showing up on Friday. So overall, the market's in a reversal without a neutral day, is in a reversal, and the expectation, given where we are, the expectation is for the market to be responsive this morning. Here's what the overnight session looked like. We opened up here, pushed up, pulled back to the point of control from above now, from above. So the overnight low is basically a tick beyond the point of control. The overnight low is also right on to the tick of Friday's close, and then we start to push up strong with the European session, and we have basically been in a pullback for an extension move, most likely. So we have, oops, We have an impulse pullback, and the extension is expected. I'm expecting that 47.50 not to last this morning. So we'll see what happens here in the next 15, 20 minutes. So since it's the beginning of the week, I want to take a moment and look at the big picture. This is a weekly composite, and basically this shows again what we've been up to. We've got this sort of uh, trend that's going down, and it's likely to retest that 2154 area. That's a big point of control up here, this black line, and that's really what I believe we're aiming for. If we test it, pull back, put in a higher low, and start pushing up, what it might look like is a push, pull back, higher low, push through, pull back, and then continue higher. We have been doing this dance for quite some time now. We're stuck in this area just like we were stuck in, we've been stuck in this area since July. And this reminds me a lot of when we were stuck back here and back here last year through the summer. We were just stuck in this tight range and unable to get to new highs. But the market's just rotating back and forth. Looking at the weekly market profile chart, here it is. And again, the easiest way to see this stuff on your screen, if you're looking at the Trader Byte on the S5 site, just go to the bottom right corner, click on the YouTube button so it can be open in YouTube, and then maximize your chart. Make sure it's set to 1080p to see the prices and so on. This is last week right here. Let me change the color of my pen. This is last week right there. This is the prior week with the gap. And what we did last week, what we accomplished last week is clearly we traded the same area of acceptance. So the prior week, however, we shifted that point of control up, and that's really a shot across the bow or a warning to the bears right now. It's already shifting up, and you've got to take a more defensive position. The target is 54 and a quarter, the 54 and a quarter area. And then right above there, we have a gap to about 56 quarter, 56 half, and that's what's likely to be tested next. Not that I'm a bull or a bear, but that's how things are shaping up. Anyway, what are we expecting for today? What are we expecting for today? Today, I'm expecting it to try to be responsive. This is a pretty decent sized gap. We're trading at 54 right now, right here. That's our last. We're trading at 54. We're above these tops. The expectation is for the market to open out of range, auction out of range, start shifting downwards, and I expect that it's likely to find buyers and start to push up. And then I'm expecting the day to just fill this low volume node. That's hypo 1. But I'm looking for a test down and for it to rotate back and forth with a break on the overnight high to complete the overnight move. I want to caution you. This is the type of situation where a higher time frame participant is likely to be active. So with it breaking out of the most recent bounce, by most recent bounce, I mean all of this stuff here. Essentially, we are back. We are back and trading in the range of October 11th, which was a trend day down, and there's a higher probability here that we would get an open test drive. The second hypothesis is an open test drive, and the drive is likely to take us to the 53, 54 area. That's hypo 2. Okay, an open, and then because we are moving out of balance and we are above the same kind of reasoning, the open test drive could occur the other way. We could test the overnight high and then find a drive down into the prior day's range and a push down, and that would be hypo 3. So what does that mean? Those are conflicting ideas. What does that mean? It means we basically have to sit and wait to see which side has the bigger rotations, which side is pushing harder, and that's the side we want to be on. We don't want to fight the market. We want to play with it. Okay? Good luck today, and I will catch you tomorrow. Take care.